Welcome into the crypto bunker. Today we're going to talk about silver miners, and I just wanted to show you guys a chart pattern that I'm seeing. It's called a broadening wedge. It's called a broadening descending wedge pattern, and we're seeing this play out in a few silver miner names. I know that it's been super volatile in crypto, and obviously we're basically at the levels that I've been talking about for a few months here. Um, And it looks to me like we're going into a longer term bear market here for crypto. So it's probably a good time to, if you want to try to make money in other markets, to look at other things. There's no reason to stick around necessarily. Obviously, I'm going to be covering crypto. I'm going to be, I'm bullish on it long term. But when we look at the economy right now, it doesn't look good. We look at the Fed trying to raise interest rates into a slowing economy with inflation is a recipe for hyper stagflation, which for me means that gold and silver could outperform. And we are seeing that today as we look at um, some of the charts here. We can see that gold was up today as crypto was getting killed and the S&P was down 4%. We had gold up a few percentage points on the day. We had Newmont Mining leading the charge up 3.2%. It was the top performer in the S&P 500. So that's good to see for miners in general. This is a silver miner. It's called First Majestic Silver. And as you can see, we're below the 200-day moving average, usually not a good sign. But to me, that just spells even bigger of an opportunity. And we do see the dip getting picked up here. And why I think that is because we're seeing this trend line come in and we touch the bottom, and that's where people went long, in my opinion. This is where we see the traditional broadening wedge pattern goes from top to bottom, and it bottoms about 3 times usually. This is probably about 4 times that we've hit this bottom. And then we usually have a few on the top. And the target for this is usually this top right here. So that would be around 1896. So that's a really good gain. There's also a case to be made for this type of, so this might be even the same thing, but usually you can take it from wherever it breaks out from there. And that pretty much gives us the same target as well. So that makes sense. So if you're looking for, the potential of some gains, especially short term, I do think it's possible that gold and silver rally pretty hard in the summer, even right now, and then cool off pretty quickly. This could be sort of a final blow off for potentially for commodities. And usually gold and silver will run at the end of a commodity bull run. So it depends if we're at the end or not. I'm not sure about that, but it's possible. And it seems to me that not enough people are long gold and silver right now, which to me makes it seem even more attractive. So we're also looking at Endeavour here. Endeavour Silver has now touched it's basically the same pattern, but it actually is catching support at the 200-day. So we broke out of the 200 on the top here. And then we now are finally coming back and testing it 2 years later, actually. So we broke out in July. And it's funny that, remember, this is when we broke out in 2020 was June, at the end of June. So the end of June is usually actually the best time to buy silver historically, if you look at a month by month basis. And then we're also talking about a broadening descending wedge. And we're seeing a lot of this get picked up. As we can see, this wick got picked up. All of these wicks are getting picked up, and we just caught support. So on the opening bell tomorrow, I actually think for this particular stock, I will be buying options. But you can just buy it in a spot fashion, and you could be looking at upwards of 768 for this one. if we take the target here, see if it matches up with that. It does. It does. So yeah, that's pretty much how you read a broadening descending wedge pattern. And these are just a couple examples. I also, this is kind of more of a, not exactly a broadening wedge, but a, a descending wedge, I guess. And to me, this isn't as much about the chart, which looks bearish, to be honest, as much as it is. Well, we did get picked up there on the bottom, and we got picked up here, so a little bit at least. So yeah, I mean, if we can break out of this, that's a sharp, sharp move there potentially. So, um, we could say if we're looking at a move, it might be something like that. Back to these highs again of 923. So these silver miners, when they move quickly, as we can see again. June, July, August of 2020, we saw a sharp move upward and a spike. So this can happen in gold and silver. It's not, I do think that right now everyone seems to be sort of lulling to sleep on these. The physical silver market is cooling off, so you can get physical silver for lower premiums. Finally, you can get, I think, some single, rounds for maybe 26 an ounce. So that's definitely good for physical buyers. If you don't have any physical silver, obviously I would recommend buying that before you buy like silver miners. This is more for people who are looking to speculate and not have to, I guess not. I mean, for me, I prefer physical, but obviously I do have some money. I basically, I don't want to sell that necessarily. So this is more of an option to sell silver. But as you can see, a lot of these are looking pretty good. I also like Blackrock Silver. But as I was saying, Fortuna silver mines, it's actually like only a 15-to-1 price to earnings ratio, which for a silver miner is like really, really low because of the upside so the upside's very big in that one. This, we see it did get picked up on the 200 week. This is a newer stock on Blackrock Silver, so it's not as much history. It doesn't look necessarily as good as, some of the other ones. I mean, we can say that it's sort of a wedge, but it kind of failed on this breakout attempt, obviously, and then it got knocked back down. So it's not clear to me exactly. I just know that these guys have $2 silver in the ground. So they're basically a developer, or they're not a producer yet, but they have a mine in Nevada, which is American soil. It's privately owned and by them, and it's all good to go. They basically are going to be able to mine the silver for $2 an ounce, and they have the purest silver grade in the industry. So they're basically pulling out the most silver for the least amount of rock that they pull out. So that's big. So I'm looking at like this is as a massive gainer potential. As you can see, obviously, this is the target up here around 522. So that'd be like a 10x from here, just based on the spot. That's not even talking about like the potential for options or anything like that. So yeah, so these are just a few thoughts. I mean, we can look at silver itself. Obviously, that matters for this as well. Hopefully, I don't have too many lines on there. So this is potentially something I'm expecting. Silver usually will run when you least expect it. And we did have a massive sell-off here in 2020. And again, we ran, through the summer and we topped out actually pretty much in August, the beginning of August. So it was really quick. And this to me is a bull flag. This is like just a textbook bull flag. It's not necessarily a, it might be a broadening wedge, but, to me, this looks even better than the other ones. And for this, I mean, I guess you could say the target would be 30 if you wanted to just buy like options on SLV or PSLV or something. But I am looking at like 35 as like my base case. Obviously, $80 is my target for like longer term, physical. Like if I was going to sell it, it would probably be like $80. But in terms of this, I mean, we are looking at a super bullish chart here. I mean, um, I think I showed last time possibly the Ethereum versus silver sort of thing, but you know, Ethereum had a similar chart from 2017 basically to recently in 2020, and it broke out and it went 10x. I'm not saying the silver is going to do that, but it does look exactly the same. I mean, every single move is the same. And again, like because we crashed down here, people are now very bearish, and we caught support at the 200 week SMA. Very, very, nice looking there. We do have these squeezing together, which is usually a starting of a good time to accumulate. So I do expect us to at least go to the top of the channel. And if we can break through 26, 2630, that's basically where we caught some action here in terms of selling. So if we can break above it, I mean, we look at the target for that, and it might not be exactly 35. If we're looking at a broadening wedge, it's 32. But for me, I'm actually looking at it as a bull flag. So if we have this bull flag like that, and we take it to the top, I mean, we could even get to 40. So that's probably a good time to, $35 probably be a good time to like see where your silver miners are at if you're following the silver price, and then sell based on what the silver price is doing. But to me, it seems in the macro landscape of things that inflation is here to stay. And even if it goes down a couple percent, that is still really high. And I don't think that the Fed has the tools and necessary actions to be able to knock the price of oil and food down, because the food has already been planted in the ground. So you have to understand that with the farmers, right? And the farmers already paid the price of fertilizer that they need for the food. So in the fall, during harvest, they're selling that based on the price of not only diesel for their tractors and things that they're using, but they also the fertilizer that they had to use, all the tools, all the chemicals, all the things that go into, the feed for the livestock, the wheat, that they have to feed, use to feed the livestock, all that stuff. It goes into the bottom line, and it has to go into the price. So the food stuff isn't really going to go away. And I would even argue that it could get worse, because we obviously had, I would say this, I would say with the economy slowing and people concerned about recession, they're going to focus on things that they need. They're going to focus on food and fuel. Okay. I've been saying this for a couple months now on Twitter. I actually think it could exacerbate the issue, because people are, focused so much on recession, they may not be able to go out and get like clothes and like, consumer discretionary items, which is worse for the stock market, but it's going to boost fuel and food. So, I mean, people might eventually not travel as much. They might not drive as much, but everyone needs to drive. Obviously, truck drivers need to like move around. There could be less freights, I guess, because consumer discretionary items might go down. So that like I could see oil coming down a bit, but what we saw last cycle was when oil came down, silver and gold went up. So, but again, I'm just saying that I think in terms of gold and silver's time to shine, it's now, because where are you going to hide if we have high inflation? You can't hide in bonds. You can't really hide in cash. I mean, people are in cash, but they don't know what to do with it. Like they have to put it somewhere. You're not going to put it in the stock market because we're going into recession, but we still have inflation. So this is what happened in the 70s. We have to look at history. And what happened in the 70s is gold and silver went to, really crazy. So I think that we're just facing that same thing again. People can say they want to think this is a double top. I'm still, allocating someone's capital that I manage to energy and commodities. I'm not getting out of those just yet. And a lot of people want to run out of those. I mean, I think people are just selling anything right now. So that's why you see a pullback in oil a little bit. But it still looks really bullish to me. And I don't really see, I mean, it's catching nice support here. And this is like um, in my opinion, a nice looking wedge that is actually bullish on the way up. And if we can break up, we might have a blow off top. So, and we're just seeing the weeklies cross here. So the 200's finally on the bottom. We're wide, but we're not wide enough because that is still there. See, so see how, when did it happen? So this is like where we are in the cycle. Okay. If you're paying attention to the moving averages, you have just the beginning of these crossing right here. And this, see how it kind of just is like wedging up this whole time. And looks similar here. It's like wedging up. Again, it's catching support here on this nice trend line. And it looks like it wants to stay up here. It doesn't really look like it wants to come down at all. So when you're seeing that, I think gold and silver have to play catch up for sure. And I think they'll play pretty quick here. I think a lot of people are going to be caught off sides because they think that the summer is usually not a good time or something, or, historically besides 2020, it's never usually great, more about the fall. They think recession is coming. So they actually think deflation is coming. I've heard like Jeff Gunlack and Scott Minerd and Raoul Paul say buy bonds. I just disagree with that on a fundamental level. Just on a human level, like really you want to buy bonds here? I don't know. I mean, it just, to me, we did catch okay. So this is what happened before though. I mean, it looks like, okay, maybe we bottomed. Obviously we have this like long-term trend line that I drew and we finally touched it. So is the bond market just oversold? It is. It's very oversold. I'm saying I would probably hedge my gold and silver miner positions with the long bond if I was in a retirement account or something, because bonds are good for deflation. Same with stocks, I guess. Like, I think if we start to deflate, then the Fed lays off and stocks like sort of go sideways and bonds continue, sort of try to regain this. But look at how bad bonds have performed. People think that like when they hold bonds, they're confused. Like my dad or like people, they don't understand bonds can go down. And if you're in a retirement account, you're probably crushed because you have stocks and bonds, which is terrible. So, I feel bad for those people that didn't really understand what was coming. And to me, this is the worst bond sell-off basically of all time. It is actually. It's the worst bond sell-off of all time. And so now where do you go, right? Where does all this money pile into? Well, it probably piles into gold, especially with geopolitical situations, with countries defaulting on their debt. I mean, we see the Italian bond and the Japan bond yields just going nuts, and the bonds just fell off a cliff, even though they have the Japan central bank printing money to buy the bonds back. It's still dumped off a cliff. So, these are major issues. I think that there's major contagion across markets. Looking at crypto, everything screams gold to me. So, hopefully you guys are doing well out there. It's going to be okay. We're going to get through this. But again, trying to help people make money through, crisis situations is not easy. I hope that you guys, appreciate it. I hope that you can give this video a like if you do appreciate it. Give me a subscribe. And again, have a great night.